Everyone, welcome to Value. So today we're looking at Rivian and Nio, and we're going to try to answer a very, very difficult question of which one's actually more attractive, because both are selling around $23 billion. So when you've got two stocks that are selling at very similar valuations, that's always going to be a big question for particularly someone who's actually interested in EV stocks and they don't know which one to buy. Like in most cases, you're probably just better off buying a bit of both, so you kind of diversify your risk. But if you were to really just choose one and go like, if I was just to buy one, which would I buy? So we're gonna try to dive into the details and then try to figure out which one's actually more appealing. So firstly, we've got Rivian, who's been listed for less than a year. It's basically been a producer recently, not too long ago, whereas we've got Nio, who's been listed for quite a few years now and have been producing for quite a few years. So you'd think Nio kind of has the upper hand because they've kind of been producing much longer. They produced like 91,000 vehicles last year, and this year it looks like they're going well above 100,000. You would hope they would be going at a much higher rate anyway. So last quarter they produced 25,768 vehicles, and that was a 28.5 increase on the prior year. Whereas Rivian, for the total production for Rivian is 5,000 vehicles. So you look at that number, that for the several months that they've been producing, they've only done a fraction of what Nio's produced. And basically with Rivian, they're looking at producing about 25,000 vehicles for this year, whereas Nio achieved that in the first quarter. So when you look at that, you kind of feel like, oh, actually, there's a massive difference in that aspect. But you also have to consider that, hey, actually, Rivian's actually ramping up really quickly. And if not for constraints, they could be producing 50,000 vehicles this year. Whereas Nio right now, for last quarter, they only increased 28.5%. And in April, when they reported, they only increased by 13.5%. So they're not really increasing their production numbers very quickly, but we know that it's because of COVID and also because both these companies are facing kind of a supply chain kind of constraint. So then the numbers are kind of much smaller than as if they were to be able to produce at a much larger rate. Like you would imagine, Nio could probably get to about 200,000 vehicles this year. So if we were to just use those numbers instead of what we're seeing right now, then that probably might give us a better idea of potential as well. So Rivian, they would produce on a normal year, would be about 50,000 vehicles this year, and Nio would possibly be about 200,000 vehicles if things kind of smooth out later on in the year. So in that aspect, Nio would be producing a lot more. So yeah, like Neo's clearly would be worth more in that aspect. If we look at pre-orders, Rivian's got 90,000 cars in pre-orders from consumers and 100,000 from Amazon, so that's 190,000. Whereas Nio, for the existing cars, I don't think they have too many pre-orders in the existing lineup, but for the ET7, which they only recently started producing, apparently they've got pre-orders that amount to about 6 months of production, so there is some popularity there. But we would say Rivian looks like it's probably in more demand, based on demand, like those pre-orders. So overall, I think Rivian kind of runs more on the product side. Like that vehicle looks insanely good, but it is also more of a luxury type vehicle, whereas Nio's price point is much lower. So kind of very different products in that aspect. We've got Rivian, who has around about 17 billion in cash. So if we were to minus that off the market cap, we would more or less get about $6.5 billion. Whereas Nio is possibly looking around about probably closer to 8 billion in cash now, given the time that's passed. Because end of last year they reported about $8.7 billion. So imagine they've kind of used up quite a bit of that, used up a good amount of cash. So I would say they were holding $8 billion in cash, which would basically put them at a $16 billion valuation if we minus the cash. So already we can see that Nio is actually worth more if we minus the cash, and just looked at more of like an enterprise type of valuation, and yeah, like just solely based on minusing the cash anyway, and not minusing any other different assets. We're just keeping it simple in this case anyway. So yeah, like you would see that Nio is actually worth more. So there we kind of have a difference that, hey, Nio produces more, and if we don't count the cash, they're actually also worth more in that aspect as well. So in that sense, yeah, like it looks like Nio would probably win out in terms of production, because they're kind of producing a lot at a much higher rate. In terms of the future, like we do have Rivian that might get up to 150,000 vehicles next year, but we also have Nio that could be producing, or at least they're going to have a capacity of up to 600,000 vehicles next year. So both companies are able to ramp up quite a bit. But in terms of those numbers, Nio definitely looks ahead in that. In terms of like political risks, like since Nio is based in China, it's a Chinese stock, we've always had difficulty in those financials. So you kind of trust Rivian a bit more when it comes to those financials. So hence Rivian kind of wins out, and just being able to know that the financials are more trusted. In terms of backers, like Nio does have a lot of good backers in that as well, as particularly in the local government, who's been there every step recently with them in terms of expanding their manufacturing, giving them amount of cash. Rivian has backers in Amazon and Ford, but Ford is selling out of like Rivian because I guess at the end of the day, they are competing against each other, and Ford probably finds it more useful to have the capital to produce their EV vehicles than probably helping a rival. But we've still got Amazon, who is wanting to order 100,000 vehicles from Rivian. So in that aspect, basically, we have a situation where they're probably equal. They both have backers. So, in terms of finances, they are both probably able to raise enough finances to keep them going. We have a situation in the fact that Rivian in 2024 will also have a capacity of 600,000 vehicles, though Nio could have increased it much more by 2024 as well. But you got to be impressed with Rivian and how fast they're able to scale up their manufacturing. So in a sense, if we're looking at a very equal kind of equation, given that Nio is actually worth quite a bit more if we don't count if we minus off the cash positions off the market value. So in terms of who I would pick, I would pick Rivian because in the next 2 years they have the capacity of up to 600,000 vehicles, assuming they can get that Georgia plant finished on time. Then in that kind of view, like we're watching Rivian kind of just accelerate their production. They've got a lot of cash, particularly in this environment. Having the amount of cash is actually really, really good. Though Nio's financials are a lot more healthier because last year I think they only lost about 700 million, whereas Rivian this year will probably lose several $1 billion. So in that aspect, Rivian's gonna use up a lot of cash, and but I like the fact that they have their own manufacturing, whereas Nio kind of outsources their manufacturing. So less control, but it doesn't necessarily mean you need a manufacturing kind of capacity in terms of that's in your control, because Apple does not manufacture their own iPhones. They actually outsource it, and that's very fine itself. Both models kind of work out, but I probably find in terms of low risk, I probably find Rivian as having lower risk in that aspect, because they've got more pre-orders. So there's a strong demand for their product. They've got a lot more cash on hand. They're operating markets where it's very much more transparent for investors like us that are more just reading the data that's in front of us, and you can also see more like kind of YouTube reviews and all that on Rivian vehicles. Whereas with Nio, you kind of do see reviews and all that, and you do see the cars appear and all that, but those financials are always going to be doubted to some extent at the end of the day. And you've also got political risks of the government that say Nio kind of relies a bit too much on the local government to help them out. But that's just my view anyway in terms of that. So in terms of production, Nio's ahead, but I think Rivian is making a lot of progress in trying to catch up. And they sell a significantly higher pricing vehicle. So in a sense, for every vehicle that Rivian produces, it's like Nio producing two. So when we think about that in that sense, I think Rivian kind of, in terms of the future potential, they win out in terms of that. In terms of cash positioning, Rivian wins out in that. Political, yeah, I would just say overall, I think Rivian kind of, for me as an investor, I kind of feel safer investing in Rivian. While Nio does look really good and its production numbers are really good, I kind of feel safer with Rivian, though you kind of feel like, hey, if the stock prices for both companies were to move, Nio would probably move marginally faster, but at the same time, I feel like you've got more potential here. You've got a lot more, kind of like I think like you can hold Rivian and not feel like anything's gonna go wrong entirely. But if you hold Nio, you would feel like there was much more risk, because firstly the financials could come under scrutiny, delisting could be a scrutiny, the local government or the national government in China might be able to scrutinize them as well. So both are really good companies, but if we were to just scrutinize both of them, I would say, yeah, like Rivian probably is a better bet. If you're in the longer term, Nio is probably going to do better numbers, so I think the share price is going to possibly go up a bit more in the shorter term than you would for Rivian, because based on those manufacturing numbers, Nio is obviously much more ahead and are going to produce much larger numbers. But in terms of scale, they are not actually producing significantly higher than last year. Though that once the Nio part comes in, which is closer to the end of the year, their production is going to increase again as well. So overall, like if it's short term, I would say Nio might be the better stock in that aspect. But in the longer term, I feel like Rivian's more of a safer bet. But that's kind of my view anyway. Let me know what your thoughts are, or if you have any questions. Until then, good luck investing, everyone.